Hey guys, hope all of you guys are doing well. I'm currently, since I live in the East Bay of San Francisco, I've been in lockdown probably longer than a lot of the country. I think we started doing it early, but certainly in this crisis, we've got to be careful, and I hope you guys are all staying safe. Also, as well, funny enough, gives me a lot more time to trade since a lot of the rest of my life is on hold for right now. Family's doing well. No cases in my immediate vicinity. Well, family-wise, but certainly where I live, we are near one of the coronavirus hotspots. But so stay safe. I hope you guys are doing well. Nonetheless, I thought this was a great opportunity to start or to do a long-awaited YouTube video visit because we've had a major breakdown in the crypto market. You can blame the virus or blame some hedge funds. I mean, the blame always starts flying once you get a big move down like this. But regardless, that's what we have. We have a breakdown. So what I want to do is take a look at my long-term picture because it does change after this. After this move down, I think that's the most important thing because I've been one of those guys looking for six figures, and while it's still a chance, I have to temper those views big time after this breakdown. Talk about what I'm doing short term to manage. That said, we caught the breakdown or are aware of the breakdown very early on Elliott Wave Trader, so it wasn't necessarily. It just went a lot farther than expected once we got the first breakdown, which is at 7125. So let's revisit the long term. Let's talk about short term, and then I hope to leave you guys with a lot of great information that will help you guys in the next few weeks whenever I pay another visit on YouTube. But at any rate, I want to go back to 2019. If you've either followed my work, or a member of Elliott Wave Trader, or seen any of my talks, once we had this 5-wave structure in 2019, I started to talk about, wow, we've got potential of a setup for six-figure Bitcoin. That's just simply looking at using the Elliott Wave theory, wave 1 and 2. And what I was looking for, if you recall, whether you were a member or on the YouTube channel, once we topped in 2019 at 13.9, I called out support for wave 2 at 4,300, and even along the way, I wanted to see this go a lot deeper, as we went, but we had a potential bottom at 6,400. That bottom that we had at 6,400 always depended on 7125 holding. Again, you guys go back to on the YouTube channel and you can hit my articles and whatnot. That was ultimately when we topped at this recent high in mid-February. That was the support level, and so that needed to hold to get us into the impulsive third wave. And unfortunately, as soon as we hit 7125, we accelerated down. We did not see an impulsive reversal. And honestly, when you're using the Elliott Wave theory, these levels that we identify are super important. And when they don't hold, often they do give us the opposite, which is a impulsive reversal. And that helps because I had hedges right underneath that level and caught some of the short down as I was talking to subscribers this morning. It's often very smart to fade the Elliott Wave count when the supports break because they often do accelerate. At least we can get some level of skew out of that, so to speak, a little bit of runway. So we caught that. Now the real problem we have with this chart long term is that we did not only broke 725, we broke 4,300. And remember, I was calling that out for over a year when we topped in May of 2019, and that also went. Now, we only have a small breach. That's the challenge here. We only have a small breach, and what we do know from Elliott Wave theory is that when you retrace more than 764 in log of the previous wave 1, you often also take it out. We're not threatening it yet right now. We almost did, and I'm talking about the 312 low in December 2018. Once that goes, there is no setup for six figures, at least in the long term. But at the very least, we certainly should call that setup at risk. Okay? So I'm speaking two sides of my mouth. I think we do have a major breakdown. Whether it starts a larger trend is a question right now. What I can say is if we do break 4,000 again, get ready for a slide to 2,000. most likely. Again, if we sustain that level, especially if we see follow through below our breakdown here. And what was that low? I have 3940 on this chart. We have I think we had 3700 on some charts, and that's just way too low for an ideal 1-2. We'll draw the 1-2 just so you guys remember. Again, some of you guys may have forgotten what I was calling for, but it would be a structure much like this right here. Okay, and I'll color this red, but basically this. I mean, though a lower 2, I'll color this red just so we have differentiating. Though a lower 2 doesn't invalidate the structure, that low, that a 2 that low makes it questionable. So right now I'm sitting with a bearish perspective and a bullish perspective. The bearish perspective is right now I'm trading up, but if we do break 4,000, I see a slide to 2,000 at least, and if not, even we could even go to 1,600 and 600 below that. But and that's basically this long-term block that's way down here, and this changes the entire primary count that I'm using on the monthly. If we do happen to hold, we still will keep this red wave structure. Okay. But more likely, because we're so low, I'm considering that we may be in a C wave higher, and you can see that right here where we stop short of that before we take another slide. And it'll still give us a real nice swing trade over the next couple of months, but it's just not going to give us that run to 6 figures. So I'm watching both right now as long as we hold 4,000. But if we hold 4,000, sorry, if we break 4,000, then I see a run down to 2,000. If that doesn't hold, 1,600 and 600. So I will go to the shorting plan once that that level is breached at 4,000. All right. So we got a long scalp going on short term. I won't bother with you guys with that, but we are trading a long scalp up to potentially 1,600 if Bitcoin will hold support here locally. That's going. If you look at your charts, we're starting to push higher. That's good news for bulls, but there's a lot more to sustain after we see that run up, that little bit of a run up that we're seeing today. All right. The one thing I also want to say, and this breakdown has done far more damage to altcoin counts, and I've been an alt bear since 2019 and seeing so few alts participate. I've traded Ethereum quite a bit and got some we had some. I didn't take the trades personally, but certainly had some good trades in Link. They're good alts here and there, but by and large, this breakdown has done far more damage to altcoins, and even Ether, which is one of my favorite altcoins, and not in terms of like the project or anything, but just the chart has largely broken down. And I'm not looking up. I was looking up for 4 figures Ether over the last year, and I consider that setup largely dead. It hasn't invalidated again, not breaking the December 2018 low. But it's got way too low for me to trust it. So I think we could see 300 on Ether again, but that may be a major top. We'll just have to see how it goes. I mean, look at EOS. It broke its 2018 low, and I consider that a major breakdown. Okay, so it's invalidated. It's the setup that we're looking here on Bitcoin in red or white upward is completely invalidated in EOS. Okay, doesn't mean that it can't find a bottom in here locally and restart a setup, but that multi-month setup is completely dead, invalid, and not. There's no reason to look up very high up in EOS right now with that setup broken. All right, so I'll leave you with that. I mean, a major change. I can't say that we're going to break down further yet, but that 4,000 level that I have underneath Bitcoin puts this market in further risk. All right, so watch that level. It may vary. Note that it may vary a little bit per exchange, and also be wary if it breaks that level and then cannot break our March 12th low. So you do have to be cautious running short directly off that low, but that's a really key level to sustain this market higher. All right, I bid farewell for a period of time until we have something else to talk about, but that's what I'm looking at right now. Talk to you guys soon. Bye.